If you're buying a home and only budgeting for your down payment, we need to talk. I'm Christina Roberto, your North Central Ohio real estate resource. I've been doing some videos on YouTube and some other platforms to help buyers and sellers alike make smart decisions around this major transaction in your life. And today I'm going to be talking to buyers, not necessarily first time home buyers, although if you aren't a first time home buyer, you may know some of this stuff already. But it's definitely a conversation you should listen to, regardless of if it's your first time or not. If it's your first time, you definitely want to hear this because there may be some things that we're going to talk about today that you just hadn't thought of yet because you're new to this process. So let's dig into it. First thing is I'm going to talk about some costs in addition to your down payment that you've saved for, some things that come up within a transaction and just after a transaction that do cost money that you're going to want to have some money set aside for. I'm going to list those 5 things first, and then I'm going to dig into each one of them individually. So first of all, here's the list. We have closing costs, home inspections, earnest money deposit, moving costs, and ongoing maintenance. Those are the 5 things we're going to talk about today. So without any further ado, we're going to dig right into number 1, closing costs. Your closing costs are, again, in addition to the down payment that you have saved to purchase a home. So when you purchase a home, you have generally already talked to either a real estate agent or a loan officer, and they've kind of given you an idea of how much you need to have for your down payment. You've got that. It's set aside. That's where we're leaving it for this conversation. So know that everything that we talk about in the next few minutes are things that are in addition to that, okay? So your closing costs are in addition to your down payment. They are generally 2 to 5% of the cost of the home that you're purchasing. So if you're purchasing a $250,000 house, let's say, you're probably going to be closing cost wise somewhere between $5,000 to $7,000 in that neighborhood there of closing costs. So what does that entail, right? What do closing costs cover? Well, they cover lender fees, appraisal fees, title fees, those kinds of things. And also maybe some recording fees and your homeowner's insurance. Those are the things that are covered with that. These are things that have to happen when you purchase a home, and you definitely need to have the closing cost money wrapped up in there, okay? Getting ready for it. Also know that your lender may talk to you about something called points. Points is money that you pay in addition to your closing costs at closing if you want to, what they call, buy down your interest rate. So if you want your interest rate to be lower, they may offer you the option to buy some points to get you there. You don't have to do it. I'm not going to get into it very much because that's really a discussion you need to have with a loan officer, and in specific your loan officer, because they have different things that they want to go over with you. Some of them may not think it's a good idea. Some of them may think it's a good idea. So I don't really want to get too deep into that subject, but just know when I am talking about like that $5,000 to $7,000 kind of in our area for closing costs in Ohio, I'm not including if you're paying points, because sometimes people are like, well, my closing costs were like $12,000 and I didn't think they were going to be that high. Well, 9 times out of 10, they decided to buy points and didn't really think about what that meant when it came to closing costs. So again, on a $250,000 house, 2% of that sales price is $5,000. So you should kind of expect that, $5,000 or more at closing in addition to your down payment. With that said, that part of that is an appraisal, which I mentioned a couple of minutes ago. An appraisal comes early in the transaction, and your lender generally wants paid for that appraisal. So they're going to order the appraisal, and they need paid for that because they have to pay the appraiser at the time that they perform that service. So that's something that you will come up maybe within a week to 10 days after you are in contract and we're heading down the road to getting you your home. You can expect that you're going to be asked by your lender most likely for the appraisal fee to be paid to them ahead of time. So as we're going through all these, I am going to be talking to you about things that are kind of expenses that occur early in a transaction versus at the closing table. Okay, so that's the first one. Appraisal fees, you're going to see that again pretty early in the transaction. It comes up pretty quickly. Second, home inspections. So we are currently in a market where it is still very much a seller's market. And so we are not seeing a ton of sellers willing to pay for the buyer's home inspections. With that said, every once in a while, when I'm showing homes to buyers, we will come across a home where they have done an inspection before putting it on the market. They're providing that to you. That's awesome when they do that. It's just not very often that it happens right now. So you definitely want to make sure that you have the money that you need to purchase your home inspections, purchase and pay for your home inspections within the transaction. Again, this is something that occurs very early in the transaction. Once we get you into contract, and again, this is a legally binding contract, so when we agree to it, you have to perform to it, as they say. So we usually get a 10, maybe 14-day window to complete any inspections that the buyer desires and that were agreed to by buyer and seller together in that negotiation process. Don't worry, I'll be helping you with this. You don't have to know all the inspections and all of that, but I'm going to cover 3 really important ones. These aren't the only ones you can get, but they're certainly ones that I want to touch on today. The first is a general home inspection. That will run maybe $400 to $700 depending on the inspector, the size of the house, the location, those kinds of things. So that's something you want to have money set aside for. That's going to come up real early in the transaction. Like I said, once we get into contract, if we get into contract on a Saturday, the clock starts rolling. We're not talking 10 business days. We're talking 10 days in total to get your inspections done. I will help you find an inspector. I have a list of people that I can recommend to you, or if you have someone that you've used before and you want to use again, certainly open to doing that as well, not a problem. But we're going to need to get that person on the phone and get them started on that inspection pretty quickly after you get into contract. The other 2 inspections that I want to talk about are a septic inspection and a well inspection. Because we are in North Central Ohio and I do sell a lot of rural properties, and I have people who want a rural property, meaning that it's not maybe necessarily too far from town. Maybe it is, and that's what you want. But let's say you're maybe a mile or so out of town, but the well, there's no sewer or water services provided out to that property from the city, township, municipality that it's near. So that means those homes have on-site sewage disposal systems, also known as a septic system, or a well that's feeding all the water needs for that property. So if we're looking at a home or trying to purchase a home and getting into contract on a home that has a well and a septic, I highly recommend that you get those 2 as well. So that will add to those costs as additional in addition to your general home inspection. So if you're going to get all of those things, you're going to be pushing up over $1,000, $1,200. And so that's something that we'll have a discussion about when it comes time to do that and prior to putting an offer in. But just know that that's money that's due really early on in the transaction, like a couple of days after we get into contract. You're going to have to pay for your inspections, and we'll get the inspectors in there and get them started on their work. Number 3, earnest money deposit. For those of you who don't know what I just said, there are other states and markets where they call this good faith money. So if you've heard the term good faith money, now you know that in Ohio we call it earnest money. Sometimes some parts of Ohio they call it good faith money as well, but they are the same thing. So that is money that is due generally within 72 hours of going into contract. So when I say going into contract, I mean both the buyer and the seller has executed a binding contract for the sale of that home. So your earnest money generally in our area is around 1% of the purchase price of the house. So let's say you're buying a $250,000 house, you're probably going to have around $2,500 of earnest money that is going to need to be submitted to the title company. The title company, my admin is fantastic. She will reach out to the title company and make sure that they reach out to you with instructions on how to deposit your earnest money. The title company then keeps that earnest money in an account, and they can apply it at closing towards your closing costs or your down payment, or however you work that out with them. They'll apply it to wherever on that ledger you want it applied to, but just know that that's money that really isn't in addition to the closing costs that we talked about earlier. They're part and parcel of it, but that portion of it is going to be due very early in the transaction. So that's something you definitely want to make sure that you have your hands on liquid when you go into contract, because that's money that's going to need to get transferred. Another note on earnest money. Some people wonder, why do I have to do that? Well, it is showing that you are serious as a buyer about purchasing this home, right? And think about it. You're asking a seller to not market their home. They're going to go into contract with you. They're not going to be like looking for other buyers generally during that time. There are a couple instances where that may be the case, but generally they've committed to being in contract with you. They're not continuing to market the home as far as having showings and those things. So they're basically betting on a horse, and that horse is you. So if their bet doesn't work out so well and you decide that you don't want to buy a house, or something happens, maybe your car, I don't want to get into specifics, but let's just say that you wind up not being able to finish that transaction and actually purchase that home, they get to keep that money, okay? That doesn't mean that if you give your earnest money and then you don't buy the house, it's gone. There are a couple situations within a contract, inspections being one of them, appraisal being another, that they are legal ways for a buyer to exit a contract. And I will be going over all of those with you if you use me as your real estate agent. But just know you can't wake up one morning in the middle of a transaction and decide, I've decided I'm not buying a house. I just changed my mind. That earnest money is going to go with the seller. You're going to lose it. But that is, I'm not trying to scare anybody, but contracts are very serious things. We're talking about a very large investment for both yourself and the seller. So we're very serious about, performing to that contract once we're in contract on a home. So just know, if there's earnest money attached to your contract, it's going to be due pretty quickly after you get into contract. The next thing is moving and maybe some first day expenses or costs. Generally, people know what their moving costs are going to be around the moving process itself. So if you're one of the lucky people around that has friends and family that are they're just a little army's going to come over and help you move, and it's not really going to cost you too much except gas and, renting a trailer, good on you. But there are other people who want to or need to use a moving company. Those cost more. Now, this should not be a surprise to anybody. Before we even start looking for a house, if you are utilizing a moving company, you should have already reached out, gotten an idea of when they can schedule your move, those kinds of things, and gotten a quote from them about moving all your items from your previous home to your new home. So that should not be a surprise, but just know that if you are someone that needs a mover, you're going to need to figure out how to pay for that as well. And that's in addition to the other things that we already talked about. You may or may not incur some utility deposits. Generally, utilities just get transferred from the seller to the buyer, and there's not generally a lot of costs involved in that. You just kind of take over that billing cycle based on the day that you close. But if you are purchasing a home where maybe the electric had been turned off, that you may have to pay a reconnect fee, something that the electric company calls a reconnect fee. I don't really know how much exactly that is. It really depends on the electric company, the home, the situation, all that stuff. So if you do have to pay something like that, you want to make sure you have that kind of money saved up. So I would definitely have maybe another $1,000 saved up, maybe 500 to 1,000 saved up just for utility incidentals. Also know, like I said, the day of closing, that's when the bills, you as the buyer, start taking over the bills for that house. So if you are in the middle of a billing cycle, you may have a smaller bill when the bill comes due, but it may also only come like 2 weeks after you moved into the house. So you're going to need to be ready to pay that in 2 weeks. It won't be for the whole month because they prorate it, right? The seller has to pay for the days that they were there, and then you start paying for the day that you took possession of the house, whether you lived in it or not, took possession of the house, and then forward. Okay. So just know that too. And the last thing is ongoing maintenance. When you own a home, there are ongoing maintenance things. And that doesn't mean that it's something you have to do right away. Okay. I'm not saying that you need to have all this money saved up on day one, but I always suggest that buyers start, if they haven't already, a rainy day fund. And I do not mean a rainy day fund for, I decided I'm done with work and somebody irritated me, so I'm going on vacation for a week. That's a vacation rainy day fund. I'm talking about a home maintenance rainy day fund specifically. I recommend that you keep $3,000 to $5,000 in there. That way, if, really cold day, something happens with the furnace, you can call the guy, you can come over and repair it, you can pay him. You didn't have to put it on your credit card, those kinds of things. So that's something that I, again, highly recommend that all buyers consider having, is that home maintenance rainy day fund, and it will cover little incidentals throughout the year. Okay. So that's it for, those are the 5 things, again, that we were going to cover today. The takeaway is that in addition to your down payment, there are some other fees. Some people call them hidden fees. They're not really hidden, because I'm going to be talking to you about them. Your lender's going to be talking to you about them. They just, for those of you who are first timers, may be fees that you just didn't know existed. But now you know, because you watched this video. So you know now that there are some other fees. And these are things that, again, are not secret. They shouldn't be a surprise for you at the closing table. They're things that will be part and parcel of your contract, of your discussions with your lender, of your discussions with your real estate agent, and with the title company. If you are looking to purchase a home in Ohio, in North Central Ohio, again, that for me, that means Richland, Ashland, Wayne, Crawford, Medina counties, call me. I'm going to be putting all my information in the notes below. You'll be able to see all my other social media channels, my phone number, my email address. You can feel free to comment on this video and I will get back to you. And we can talk about these things if you're looking to buy a home in the next year. So please reach out if you need anything. Also, you can look at my YouTube channel. I have other videos for both buyers and sellers on there. We're talking about buyers today, but I have an awful lot of seller information out there. And even if you're a buyer, I encourage you, listen to some of those seller ones, because there will be little nuggets in there that you as a buyer can pick up just to help you be more in the know when you're looking for a home with me. Thank you for listening. Again, this is Christina Roberto, your North Central Ohio real estate resource. Have a great day.